Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Michael Pusateri, founder and CEO of Siepe, to discuss how the role of the Chief Technology Officer is evolving as hedge funds are relying more on outsourced technology. Michael, it's great to have you with us. Welcome to Trade Talks. And one of the primary areas that hedge funds have gravitated towards is cloud infrastructure solutions. What has been the difference in their approach to the public versus private cloud?
Yeah, security's always been at the top of hedge fund CTOs' minds, the security of the data and privacy of the data. So it's evolved from the physical data center on-prem where you could touch it and feel it and know it's secure, to the private cloud, which you hire someone to do the data center infrastructure for you, but you can still touch and feel it, versus the public cloud, where the public cloud being Amazon, Microsoft, and Google infrastructure providers. The same tenets throughout it. I think hedge funds have just gotten more comfortable with the security aspect of all three different models, private and public cloud. I think the benefit of the public cloud that you see people migrating to is to be able to run large workloads overnight, or be able to spin up servers to do a pet project that you couldn't otherwise do with a physical data center or a private cloud infrastructure. That has led people to gravitate and use either a hybrid or go 100% all in on the public cloud infrastructure.
And with hedge funds relying more on outsourced technology, how has the role of the Chief Technology Officer changed over the last couple of years?
Yeah, so the technology officer historically has been hired to be mostly a technologist. I think now that you outsource more and more, the CTO has to become more business oriented to understand the value areas they can provide to the funds they're providing. And then two, they become more of a vendor manager, managing vendors, but not necessarily deep in the technical aspects of it. So the role has really changed, where it's not a pure technologist, it's more of a business oriented, and you see COOs and CTOs or COOs take on both hats nowadays, because it's more operational than it is technical as it relates to managing your vendors.
Has the COVID-19 pandemic been the reason for much of this transition, or has it been a catalyst as part of a larger and more longer-term trend?
I think COVID-19 has created a sense of urgency to move some of the workloads over to reduce dependency on people and offices to run your business. So that has definitely created some of the demand, but I think it's been really a longer-term trend, one, to lower cost overall, and then two, to be more nimble or more dynamic with a smaller group of people to manage the fund.
So what types of technology challenges did your customers face earlier this year when everyone was forced to pivot and work remotely?
Yeah, I think if you went through all the DR plans I've been through in the last, 10 years or so, everyone's always envisioned going to a remote office or a subset of people working from home and having equipment at home and so forth. With the pandemic, with 100% work from home, we never really stress test the infrastructure to make sure 100% of the people could work from home. And so that brought up issues as it related to hardware procurement, hardware purchasing, because there was a huge run on laptops and webcams and things, devices that you could buy to use at home to work from home. So I think that's one of the biggest things that really people didn't foresee or really test. So whether it was licenses for VPN users, they didn't have provisioned because they didn't expect 100% of their workforce to work from home, to having webcams so everyone could have investor meetings and do things like that to continue to run their business.
Over the next 5 years, how do you see the technology ecosystem for hedge funds changing? And as a result, do you expect the CTO role to continue to evolve?
Yeah, so I think the CTO role really evolves. I mean, if you look at the pressures on hedge funds in general, it's regulatory oversight, fee compression, investor transparency, and all those things make the CTO focus on those areas. If you look at the two big areas that a lot of people focus on, is using data science to enhance performance, right, and generate more alpha, right? So you see a lot of time and money with CTOs being spent there to operational efficiency internally and risk mitigation, minimizing operational risk, to make things more efficient so you can do more with less people using technology. So the CTO's role will change to optimize those two areas versus I have the coolest technology and it's going to be an alpha generator. A lot of it's going to be around data and data science and efficiencies and operational improvements that you can provide the fund with third-party tools or internally developed tools to help bridge together solutions that you've put together.
All right, Michael, appreciate the insight. Thanks for joining us on Trade Talks.
Thank you very much.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.